These are the exact steps I used to develop my Forex trading strategy that got 6% on Euro NZD today, 3% on Euro CAD, and 4.2% on US oil and climbing. Stay tuned. What is going on, everybody? Welcome to the channel. My name is Kyle, and quickly in this video, I'm going to be going over how simple it is to create a winning Forex strategy or trading strategy. It can be really applied to all markets, but the simplest Forex strategy there is, and I'm going to be going through the different stages of that and what it really looks like in this really quick, basic, very, very quick video. Don't have to waste any time. Let's get right into it. So first, the simplest thing you need to do, the first step is you need to have a direction / bias. So for a lot of people, this is trend / the trend's your friend. Where's it going? Is it higher highs, higher lows? Fundamental bias. So if you are someone who takes into account fundamental data, this can give you a good idea of where you think price is going to go in the future. So these are two ways to actually have a bias. So when you sit down at the computer each morning, you want to have a direction. You want to say, okay, I'm looking for buys, I'm looking for sells, I'm looking at this area for buys only, or I'm looking at this pair for buys only. So for example, on the right-hand side of my screen here, you can see that I have bullish pairs and I have bearish pairs. So these bullish pairs right here, Euro NZD, Great British Pound NZD, all the way to gold, NAS, US 30. These are all pairs that I am bullish on for various reasons, mainly fundamentally sound reasons. For example, the euro is stronger than the New Zealand dollar as just like a currency in general. So I'm not going to get far into it, but essentially the euro is stronger than the New Zealand dollar, and all these currencies are fundamentally stronger, so they're bullish. And that's why I have them in the bullish camp. So that's the first step. I need to see, exactly why I'm going to be buying a certain currency or I'm going to be selling a certain currency at when I sit down at the desk in the morning. What am I going to do? Am I going to buy or am I going to sell? It just creates clarity. If you sit down at the chart and you have no idea if you're going to buy or sell, or if you have no, criteria to separate them from whether or not, it just creates a mess. You don't know what you're doing. You don't have confidence or conviction, and you're just going to be kind of lost. So if you don't have something like this to really give you a bias, then I would strongly suggest, developing some sort of trend reading or fundamental reading so you have an idea of what you're looking for at the very least. The second step is you want to have a level to enter at. So you need to find somewhere, a zone or a key area you want to enter the market at. So this could be support and resistance, supply and demand, liquidity zones, moving average retest. So these are all different ways or different areas where you can enter the market. So the first step is you need to have a bias. So for example, I want to go long. I want to buy the market. So where am I going to buy the market? Well, I'm going to buy the market at support. Generally, I'm going to buy the market at a supply or demand zone, a supply in this case. I'm going to buy when it's at a liquidity zone and it sweeps liquidity. I'm going to buy when it retests the 200 moving average. Okay, so these are all areas where you can look to enter long. So the first step is you actually looked long. Okay, you looked at your pair and you found, hey, I'm bullish on this. I'm going to be buying only. Second, I'm going to be looking, okay, where do I want to enter the market? Where do I want to actually go long from? And so, for example, on Euro NZD, I have these areas right here, these lines where I am looking to enter. So not only am I looking to enter in these dynamic support and resistance zones that I have here, I'm looking to enter at key levels of support. So for example, this was at the 1,700 level, and this one is at the 1,7600 level on Euro NZD. And on USD CAD, right at 1,3400, right here, you have an entry, and it went all the way to 1 to 3, and then came back to break even. On US oil, it is in my dynamic support and resistance zone. I'm fundamentally bullish on the pair, and it came right to 76 and bounced from there. So it's met my criteria. 1, I'm bullish on the pair. 2, I found an area I want to get long from. I want to get long from here. Okay, I want to get long at this in my support and resistance, dynamic support and resistance zone between the yellow and red line, and at a key level of support, which is 76, the 76 round number. And then finally, you want a reason to actually get long. You need an entry criteria. So for a lot of people, this could look like an engulfing candle. This could look like a liquidity sweep. and then it closes higher. If you know what a liquidity sweep is, then you know it swipes a zone and then it closes bullish. That could be an entry criteria. Break of structure, or supply and demand. So when you're, maybe you're a quote unquote SMC trader, break a structure and then it retested the demand zone or the supply zone. Those are entry criterias. There's tons of others, different candlestick patterns like double top or double bottom, engulfing, like I said, pin bars, stuff like that. These are entries once you have, one, picked a direction you want to go in, two, you have a zone you want to enter in, and three, now you have an entry criteria. So this is how you create a simple Forex strategy. So not only do you find a direction, so you have a direction, then you find a zone you want to enter in. Okay, then finally, once it's at the zone, how are you going to enter? Are you going to enter when it's engulfing? Are you going to enter when there's a liquidity sweep? Are you going to enter when there's a break of structure? For me, I actually enter in right away. I enter in right when it hits my zone, and mainly because I have tested it and I feel like it gives me the best return, the best risk return. So that's why I actually enter in right when it hits my zone. But a lot could be argued that it's better to wait for rejection. It's better to wait for engulfing. It's better to wait for some liquidity to be swept and then prove that it's going to hold the level, or break a structure, supply and demand, wait for double bottoms. Waiting for there to actually be some sort of rejection is, one of the best ways to wait to get in the market and to save yourself a lot of losses, a lot of headaches. So just to recap, I've probably done this like 50 times, but have a direction or bias, first of all. Then find a zone you want to enter at. Okay, support and resistance, supply and demand, liquidity zone, moving average retest. And then finally, why are you going to enter? Are you going to enter engulfing pattern, liquidity, break a structure, or are you just going to enter in right away? So essentially, that is how you can develop a very, very simple Forex trading strategy where you can sit down at the desk every single day and you know exactly what you're going to do every single time. You don't have to guess. You don't have to sit and wonder what's happening. And obviously, this is a 10,000 foot overview, but you can actually write these down, and as you test and test, you'll get even better. So thanks for taking the time to watch this video, guys. I hope to see you in the next one. If you enjoyed, leave a comment, and I'll see you later. Peace.